You guys know what I always say is your stop loss is always your most important part when it comes to trading. You have to always have a defensive stop loss. Um, and your stop loss must be in such a position that it's hard for price to get to it. Um, some people call it a safe stop loss. I like being defensive because your stop loss line is like your try line if you are playing rugby, or your goal if you are playing soccer. And you need to protect that line or that goal from the other team. Now, the market is the other team. Um, and you need to protect that line from the market. If the market reaches that, obviously you lose. So before I ever enter a trade, I always look, where can I put my stop loss? That is the first thing I do. And if there's no decent place for a stop loss, or no safe place for a stop loss, then the trade is not worth the risk. Um, Now, we can look at a couple of examples on your chart. So if everyone can just, if you while you have your charts open. So let's move over to some charts. I was actually looking at something a little bit earlier. Okay, just to get a bit more into it, you know, we always say put your stop loss above your most recent high with X amount of pips, or below your most recent low with X amount of pips. But sometimes that is not the the safest place or the most defensive place you can put a stop loss. Because let's say your stop loss is above a high, which is relatively safe. But just before your stop loss is the 61 fib of a higher time frame, then your stop loss is not that safe, because the market will most likely retrace to that 61 fib and hit your stop loss before coming back down. So you always need to keep in mind what is going on over the whole market, or over the all time frames of the whole pair. So even though on a 1 hour chart, yes, perfect stop loss, but on a 4 hour chart, not so much. On a 4 hour chart, it most likely hit it. I'm just gonna go on a 1 hour chart. And look at some examples. Okay, perfect example. If you guys go to Great British Pound US dollar, so pound US dollar, and you go on a 1 hour chart, I don't know if you guys put the newsletter on your charts, or if you load the newsletter. You can just answer quickly. Who loads the newsletter profile onto their charts? Just answer that. But anyway, I can see that price actually just entered the sell zone on the pound US dollar yesterday. Just entered it with 15 pips and then came back down. Now that is on newsletter sell zone. Okay, if you entered that trade, what you most likely would have done is put your stop loss. Let me just do this. So let's just say we entered there on the sell zone bottom line. You would have most likely put your stop loss above that most recent high, and you would have put it 15 pips odd above. Okay, great. But now, on a 1 hour chart, that stop loss looks good. It looks like a good stop loss. It is above my high. It is a good high. It is inside the sell zone. Let me put my stop loss there. But now, as soon as you go to a 4 hour chart, it changes a little bit. Actually, we can draw a fib. Yeah. If you go to a 4-hour chart, it changes. Because now you see the 61.8% Fibonacci is actually just above that high. And it's in the middle, exactly in the middle of the sell zone. That is why that sell zone is there. That sell zone on the pound US dollar is there because of the 61 fib and the previous support and consolidation zone that happened. So now you see, even though you entered the trade on a 1-hour chart, your safest stop loss would be above that 61.8 fib. So if you actually just put your stop loss then above the 61 fib, your stop loss will be bigger. Now it went up to 62 pip stop loss instead of being a 40 pip stop loss. So it's a bigger stop loss, but it's safer. It's much safer because even if the market comes back up, most likely it will come up and stop at the 61.8 fib and then go in your direction. Oh, I see that 61 fib is actually on the daily chart. Okay, so that is one example. Let's look at another example. That one's quite simple. Let's look at yes, the market is always all at extreme levels, and it's so hard to find something. Okay, it's just to explain it a bit more. So sometimes it's even the safest option. If you enter a trade on a 61.8 Fibonacci, so the market made an A and a B, you took your Fibonacci from your A, your B, and then the retrace your C went to the 61, and you entered that trade. Sometimes it's even safer to put your stop loss on your A and B high and your take profit at the A and B low. Then your risk reward will always be 1.6. You will always win 1.6 times more than what you would lose. Your reward will always be 1.6. And that is a safe stop loss. Because in order for market to hit your stop loss, it has to change the trend. It has to change the whole trend for your stop loss to be hit. As soon as it hits the previous high, instead of just making a C, the trend is now changed. So that is also a defensive stop loss. Also, if you put in a pending order, you don't have a most recent high. So if you don't have a most recent high because it's a pending order for in a week or so, then you use previous support and resistance. So whenever you find a big previous support and resistance, what do you do? Above that. You always want to put your stop loss above or below something important, and not just above it or just below it. Same rules apply. 15 pips, 17 pips, 25 pips above, to cover you from false breaks and all those nonsense. Is everyone still with me, and everyone can hear me clearly? Any questions, guys? Any questions I need to explain? Because I don't know if everyone is on par with me. Okay, 100%. I don't know if you guys have any examples you can see on the market. I surely can't. About the newsletter thing. Are you guys all okay with loading the newsletter profile? It is really a great help. I actually loaded. Everyone that comes and trades with me on a daily basis in Johannesburg. Yeah, everyone that comes and trades with me on a daily basis in Joburg, I make them load the profile, and they trade, and we trade all on the newsletter, and it is. I can almost guarantee my firstborn, if you just stick to that newsletter and if you load the profile and you don't miss a trade, um, there's no way you can go wrong. I mean, it's the trades are there and it's perfect. Now the thing is just everyone misses the trades because they can't see it on their charts or they forget to look at it. So load the profile, and Daniel, you have to load it every single day because the profile changes every day. So every morning when you get the newsletter, you have to just click on newsletter profile, download, upload it. The link always stays the same. So to make it easy, you can just bookmark the link. And every morning after the newsletter is out, you don't even have to open the newsletter. You just have to click on the link, or if you've bookmarked the link, just click on that bookmark, download the new charts for the profile, put them on your platform, and there will be a date on the Great British Pound US dollar chart. There will be a date every day to show you that you have the right one. So just make sure you have the right one, obviously. The problem with that is what I've seen. What I've seen with the newsletter is, a lot of people will see that it's been doing good for a week or two or three, and then they'll start using it. But then at that week they start using it is the week the prices will shoot through the zones and such. And then they will stop using it. And then as soon as it does well, start using it again, and then they'll stop using it as soon as, well, they're always on the wrong side of it. So you just have to use it. If you start using it, use it 100%. And it is 120% possible to get the same results we do. I mean, that's what we use to trade. So why not? 100%, Daniel. Yeah, when you need any help, come on the chat room, please. I know you haven't been in a while, but come on. You can even call me on the Joburg office number. It doesn't matter. I can help you. I can help you with that. I also backtest a lot. So if you wanna want some info on backtesting, go for it, because I've backtested years of data. But yeah. Everyone good? Okay, 100%, guys. Thanks a lot for joining. And I hope you're all the best for the week. And I'm flying to off to Durban at 4 o'clock in the morning. So I have to, I won't be trading tomorrow. But I will keep an eye on things and check that everything's doing well. But the market is at such extreme levels now, and this Greece thing has been screwing with us. And hopefully that will all end by the end of this week, so then by Monday we can start fresh and actually get some decent trades in. But yeah, thanks a lot for everyone for joining. Thanks a lot and enjoy.